Hey everybody, it's Will at VIP Mortgage. It's time for your local lender update. Rates are basically unchanged for the last week. Yesterday the markets were closed, so we're doing our update a day late. We are taking a small step back today, nothing really to worry about, but what's interesting is we have established that new trading range where our moves are going to be up and down from the range we're in now, and that's probably going to maintain for a little while. We are anticipating a Fed cut in September. The market probably has already priced that in. Now the question will be how many more times are they going to cut and things like that. Interestingly, in the last few weeks, we've had labor reports, we've had inflation reports. Each of those have had the possibility of causing some bumpiness in the bond market, and that didn't happen. We're staying pretty steady, which is good because the market is reflecting that they're pretty confident that things are going to be in good shape. So the bias now moving into the fall is that rates are probably going to improve or stay the same. But keep in mind the wild card that we've been facing all year is that somebody says something that the markets interpret as negative for the economy, and that causes a bunch of turmoil. An example of that is the tariff announcements in April and some of the back and forth about that through the summertime. Today we're seeing a ruling from the court saying that Trump doesn't have the authority to issue those tariffs, and that's causing some heartburn. So what I would say is there's probably going to be a little bit of give and take, a little bit of up and down when it comes to mortgage rates based on the news cycle, but the fundamentals are showing that we're in a good range, and we should probably stay pretty close to that, barring anything major when it comes to economic data. So the next big thing that might move the markets is going to be earnings season in October, when companies report how much money they've made this year, and that traditionally has some reflection in the bond market. And so between here and there, there'll be little things, and we'll keep you informed. If your folks are waiting for a rate improvement, it's important to remember what kind of improvement we're talking about. Generally, the bond market moves in very small steps, and so if we see rate improvements, we're not talking about a point, we're not even talking about a half a point. Usually those changes are an eighth of a point, 0.125% at a time. So if they're hoping for rates all of a sudden drop to the fours, that's not on the table, but we might see a little bit better rate pricing in the next couple of months. We'll keep you informed. If there's anything I can do for you, give me a call, 719-232-7553.